Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, March 3rd, 2020. This is episode number 1704. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market today, in this extended hour session, U.S. time, is showing signs of increased risk appetite. Crude oil leading the pack up 2.25%, up $1.05 on the April contract. This is WTI trading at 47.80. The DAX has popped higher 256 points or 2.16%. The Euro stocks up 1.8%. And what's off today is the bonds. The US bonds are down almost an entire handle. So that's where we stand there. Uh, there's the G7 talks are ongoing, um, and POTUS is demanding a rate cut from the Fed. We also got news yesterday that that there's potentially some coordination between the Bank of Japan, the ECB, the Fed, and BOE on stimulus. They keep the heads of these banks keep coming out and saying that they'll do whatever to support the market, and to battle the virus shock. So that's where that stands. The market is anticipating good news. Risk on sentiment. The close yesterday in U.S. equities was relatively strong. There was some selling in the last 15 minutes or so, but overall the market is expecting some good news. There's some signs there on the technical side that show that a short squeeze may be coming. This is probably premature and too early given the extent of the selling here and how much we've pulled back, but I'm gonna give an early warning to big bears that might get caught. You guys might get caught in a push here. We're still under 3,100, so it's a bit early, but it's just seems to be brewing in a way. Not seeing this as a sustained down move just yet, but we're teetering in between, and we'll see how it plays out. In terms of what's ahead, you know, for the calendar, the G7 conference started at 7 a.m. Eastern and is ongoing. As far as the calendar, there's nothing really significant on for today. We do get a bunch of numbers. ISM New York at 9:45, IBD tip economic optimism at 10, Fed's Mester at 2:50 p.m., API crude stocks at 4:30 p.m. and vehicle sales at 6 p.m., Fed's Evans at 6:30 p.m., and the Australian GDP growth at 7:30 this evening. That's expected to be relatively significant, especially with there's a miss expected here, especially with those huge fires that Australia unfortunately experienced this year. And then at 8:45 we have China's Caixin Services PMI expecting 47.7, priors 51.8. So we'll see how that plays out. Huge action by the Fed last night in the repo market. Just continuing to shove money out into the markets and to support dollar liquidity. And that's by many accounts, at least from the macro analysts, which I am not one, speaking out of my league here, but from what I've been listening to and reading, this has been quite the fuel for the rally. So about 100 billion pushed out last night by the Fed. So we'll see how the market responds to that. I don't have a review uh, uh, the scenarios from yesterday. But what I do want to look at is some big picture stuff. Um, some big picture stuff. We did make a turn off of the swing as I talked about yesterday, way back, going way back to December 2018, the big sell off there. We did hold about 50%. The 50% pullback, we have bounced up. I want to talk a little bit about the technicals of this bounce, but I also want to talk about the delta associated with this rally. So let's spend a little bit of time on that. Let me close these down. Come on. Well, sorry. Okay. So what I want to show, these are daily bars, RTH daily bars in the ES. And what I want to show here is, we got to be careful using delta because there's a lot in play here, especially long term. But overall, you have a market that has, peaked out right here and has in price moved quite a bit. It has moved to a lower low, right? But the aggression, as I had noted, for those of you who are part of Convergent all of last week, I was noting on a daily basis how the aggression on the sell side, and this is partly because of the liquidity in the book, but the aggression on the sell side wasn't all there, and it seemed like large lots. That is, traders that are executing 10 lots to 99 lots seem to be buying on the way down. And as it shows here, we have a step up in the overall delta. Again, caution here because delta is impacted by several things, but it shouldn't be this far off, in my opinion. Price had dropped some, 500 points almost, and the delta ended up higher. The sellers were not really all that engaged. Delta does not move down unless somebody hits the bid. For every contract that hits the bid, the down delta increases, shows a -1, right? So it drops by 1. So versus every contract that is lifted, that is bought across the market, it adds a delta. So this bar chart, the net delta, is simply the summation of those deltas, of those volumes as price was selling off. So last week, as we were dropping pretty hard, also a lot of the drops happened in the overnight session. But as the market was selling off during the day session, we just did not have the delta participation on the sell side. It seemed to look more like liquidity wasn't present and the market was falling on thin liquidity. This could contribute to a light selling delta. And then as soon as, what's important is, yes, there's a quote unquote, classic delta divergence. You got a bottom and a bottom, and you can clearly see those drop, the equivalent bottom on delta there and there, and you can see that these are moving up. But that's not what's really got my interest here. What's really got my interest is the push higher, really seeing some strong participation, especially on Friday. That delta on the close on Friday was outstanding. Essentially, Friday's delta reached so high on a cumulative basis, it made an all-time high equivalent delta. And so if the argument that, hey, the market is thin and therefore, can't pay attention to the delta and it really doesn't mean much, well, why why is it so high on the return? To me, this just stinks of a short squeeze brewing. The market is still bullish, in my opinion, despite the fact that the Bears are out and they're pushing. Look, I'm not voting for either direction. In fact, the bear side, the sell side, this action that we saw last week is just the, just the stuff that I love. When it happens, my biggest year was 2008, 2009. The volatility there was just outstanding, and so for me, I feel like traders, as a trader, we get paid more quickly on the short side, but we also can lose more quickly on the sell side, and we could lose more quickly on the sell side also. It's just everybody's got a different flavor. I don't like the slow grind up like we see here or whatever. But what I'm pointing out here is price has moved up, but the delta is really relatively strong. I mean, Friday's delta took away everything that's happened since the sell-off had began. And to me, this just looks like we're brewing up. Bargain shoppers were actively buying on the way down. We're actively buying on the way down. And to me, this looks like any old excuse would have us squeezing through this 3100 and pushing into 32, the 3200, 3210 area, which is the next key resistance area above. And that's, yes, I'm probably reading too much into this, but this is something to note structurally in the big picture. Really, there wasn't all that much damage done. It was quick. It happened in a short period of time to drop that many points in about a week and a half of trading to bring us back essentially to like, 2017 prices or whatever. So it's something that I thought would be very important to note. This is yesterday's action here. Let me turn off my stock zones, master levels. This is yesterday's action. A clear open auction in range. Okay. It breaks to the downside, pulls back to the mid beautifully, gives a nice rotation down, but it does not manage to break the low. And then it gets to breaking the high, the opening swing high yesterday. The short side looked really good simply because we ended up taking out the prior day's high by just 5 ticks before falling. So it looked to me yesterday on that opening swing like the buyers tried to get above the prior range and could not hold it, which is really a selling territory. And I was looking for the 2940, the 2940 value high and the peak from Friday. That's what I was looking for as a key target to the short side. Could not get there. Stopped at 42.50 before it turned. Broke the IB high. So now I'm looking to buy pullbacks. And the clearest opportunity to buy a pullback occurred way back here uh, with confluence of what was a low volume node, the mid, the IB high, all in the same area, and that just generated this. That helped launch off this big push on the close yesterday. Just a beautiful way to close if you're on it. With a huge amount of volume occurring at the very top. Look at this. We were very close to shifting the point of control to highs, which would have been more fuel for the overnight run. The expectation as soon as we closed, as I typed into the Convergent Head Trader channel, the expectation is for a continued squeeze higher, but the overnight session had really good offers up there. Here's CT Bookmap. Here's CT Bookmap. It is showing us what was there, and you could see that. Let me go back to the open. Oh, hang on, it's loading. So here's the open, just another open auction in the overnight session. Nice test of the low and the high. Very, very clear open auction. Turns the other way. This is very much like yesterday. Breaks lower and then consolidates and then breaks higher. This is almost exactly what happened in yesterday's open. But look at that liquidity in the 3099 to 3100 just sitting there. And what we end up doing is going up there and having some really nice collisions. Look at those big dots. Some really nice collisions against that liquidity. And then it fails to take it on. You have people kind of puking out, and then it tries again and is unable, and then it manages to pull back to this support turned resistance area. Resistance turned support area, consolidates for a while, and it ends up giving up these prices a little bit before getting to where we are now. So let me extend this out. There's a lot of noise in the overnight session now. It seems very, very algo-y. Look at these. You see these. There's a lot of, if you watch this column, this is the change column. You can see there's a lot of size popping in and out, and that's causing these little flickers, this noise. It's very, very algorithmic coming into today's session. Looks like execution algos are quite active, and we could see them here in the noise all around price. All of this is just flickering around, and it's causing that noise to occur. So now, when we look at the liquidity that's available, we can clearly see that the heavier liquidity is above 3100, presenting a gate that the market's likely to retest. And then we have more liquidity sitting up there. 15, 20, 25, and 30 are all strikes. And we're likely to, based on yesterday's market stance and the overall context, I expect that this will be likely challenged. Looking below, not much. We got something at 50. There's a little bit of liquidity that came in at 61 and 40, but not as heavy as the offers up top. That's what the order flow looks like currently. So back to our review, a quick look at the overnight session. Here's the overnight session. So we open up, we squeeze a little bit higher, pull back to 45. 40 is key for today. 40 is a key figure here. Today gets to 45 and then pushes back up, puts in somewhat of a double top, 99.75, 3100, sells off. A little bit of news here, and we are recovering. Look at this. Look at this profile. Very, very Gaussian profile, very normal distribution profile with a weak high, further feeding into the expectation that we are likely to continue higher. Volume is outstanding. Volume is about 6 times what we would normally expect. Expecting this to continue to be a fairly active session, but the market is quite balanced in the overnight session. The market has, what this is telling us, what this balance is telling us in the overnight, is the market has found consensus here and has executed quite a bit and is consolidating, which also leads us to believe that there's a stake. There are a lot of stakeholders, especially on this high volume. There are a lot of stakeholders in this balance zone in the overnight session. So we'll see what side breaks here, but overall, the market is kind of brewing up for a nice little move today, in my opinion. Looking at the market profile, really hard to see what this thing is doing with the elongated profiles, but overall, we left some singles behind at 30, 39 and a quarter and have run off. This whole thing is quite impulsive. There was quite a bit of volume that went into this, and there's not much left to bring us into this gap zone. Once we attain the gap zone, then we start to work our way towards 3120 and the areas above. And we saw some liquidity up there on the order flow. So that's where we stand. I'm still of the opinion that me squibbling some lines on the screen is not likely to help you much in terms of planning for the day, but it's important for me to outline what are key areas to look for today. So I'm at least going to be monitoring that. So looking at what is important here for today's session. Below us, approximately 40 points. The key number I'm looking at is the 3940, the 3000 below that down here. Oh, so 30, 39, or 40, like that. The 3000 area, which is right there. The 60 and the 40 below that. These are key areas below, key areas above. The 3100, of course, and then we have this high volume node area. It's hard to draw with this thing. The 3100 to 3120 is next. 3120, we have a high volume node up here, and those are the key areas for me to play. A lot of stock zones, I've cut way back. If you look at these, if you look at the density of these stock zone areas up here versus the density of the stock zones down here, stock zone areas down here, um, tells you something. The volatility is wide down here, and so we have fewer stock zones. We're moving to a higher time frame. The density is higher up top because the volatility wasn't there, and therefore the market had more structure. So as the market drops, these gray areas are the areas that I'm looking to are pre-planned areas where I expect to engage. But I gave you the key levels, key zones that I'm looking to interact in. Hopefully that is helpful to you. Good luck today, and I'll catch you tomorrow morning. Take care.